Tonight we conclude our week-long look at the fiscal cliff on a hopeful note. There are some analysts and Washington insiders who think next year will bring a great deal of progress on debt and deficits. Darren Gersh takes a look at just how big that agreement might be.
On Wall Street, they say the best time to buy is when the brokers are crying in their beer, when everyone else has given up hope, when all looks lost. That's how many feel about our nation's debt and deficits. That's also why analysts like Andy LaPerriere think 2013 will be the year Congress faces up to our fiscal mess.
When you start adding these things up, the debt ceiling has to be increased, the sequester has to be dealt with, the Bush tax cuts have to be dealt with. I don't think you can pass a package that does all those things, deals with all those things, without reducing the deficit.
What might that deficit reduction package look like? It will raise taxes. If President Obama is reelected over the next 10 years, look for roughly $800 billion in higher taxes from high-income households. Even if Governor Romney takes the White House, he'll likely have to raise taxes by roughly $250 billion. More will come from spending cuts. Look for big cuts in health care and entitlements under Romney, and more from defense cuts under President Obama. Add it all up, and you get somewhere around $2 or $3 trillion of deficit reduction. The goal of the package is clear.
All three of the major rating agencies have said that if Congress doesn't pass significant deficit reduction, enough to make debt to GDP, put it on a sustainable path within a reasonable period of time, that they'll all downgrade. And I think that's going to become the bogey.
A $2 or $3 trillion deficit reduction package would be enough to stabilize our debt. But budget expert Stan Collender thinks such an outcome is unlikely.
And I don't see how the politics of this have changed very much. I don't see people suddenly willing to give on anything. The election is polarizing, hyperpartisan, and not really providing the kind of forum that you need for an honest debate.
One thing is clear, the path to a big deficit reduction in 2013 will very likely be messy, uncertain, and unsettling for investors. But economist Mark Zandi says the payoff may be worth the long battle.
Fiscal nirvana is when we solve or address adequately three problems. The fiscal cliff, scaling that back, increasing the Treasury debt ceiling again so that we can continue to issue debt and pay on the debt that we owe. And also, third, laying out a credible path to fiscal sustainability.
One more thing about fiscal nirvana. It would likely mean more predictability for our economy and increased investment and higher wages and more jobs down the road. Fiscal nirvana indeed. Darren Gersh, NBR, Washington.